Picture this. You're standing at the edge of a cliff, your portfolio in hand, watching a storm brew over the market. Last week, the week of June 16th to 20th of 2025, was exactly that. A wild tale of hope, fear, and chaos that can make or break your investments. I'm the Stock Pro, your guide through this epic saga, where tech giants like Oracle soared, the Middle East teetered on the brink, and Federal Reserve dropped clues about what's next. Last week, we saw markets crash as Israel struck Iran. Now, the story's taken a new twist, and you need to hear it before you trade on Monday. Smash that like button and subscribe if you're new, because it really helps a small channel like mine. Grab a seat and let's dive into this rollercoaster week. Our story begins with a ray of hope. After the brutal sell-off on June 13th, when the S&P 500 plunged 1.13% and the Nasdaq tanked 1.02% as Israel's strike on Iran sent oil prices soaring 7.6%, investors were desperate for good news. And on Monday, June 16th, they got it. Reports surfaced that Iran was open to nuclear negotiations, calming fears of a full-blown crisis. Oil prices dipped 2.1% and markets roared back. The S&P 500 jumped 0.94%, the Nasdaq soared 1.52%, and the Dow climbed 0.75%. So why did this happen? The US-China trade talks, which sparked last week's early gains with a new framework, kept the momentum going. Investors thought, maybe we've dodged a bullet. But this story's got more twists than a thriller novel. This shows how fast markets can swing. Good news can spark a rally, but don't get too comfy. Now, let's zoom into the heart of the tale. Tech stocks, the market's main characters. Last week, Oracle stole the spotlight, rocketing 13 to 14% on June 12th after Q4 earnings showed $15.9 billion in revenue, up 11% with cloud infrastructure surging 52% to $3 billion. This week, Oracle kept shining, holding its gains as investors bet big on its AI and cloud dominance. With a 2026 growth forecast over 70%, it's like the hero who keeps saving the day. AMD also played a starring role, rallying Monday on its MI400 chip reveal for 2026, backed by heavyweights like OpenAI and Microsoft. The chip sector, bruised by last week by tariff fears, found its footing, with the iShares Semiconductor ETF up 1.5%. But not every tech titan emerged unscathed. Nvidia, the AI king, stumbled again, dropping 2% on Friday after last week's 2% slip, as investors worried about overvaluation with its PE ratio above 70. Adobe, which tanked 5.3% last week despite beating earnings, faced more pressure. Investors are hungry for bigger AI wins, and Adobe's not delivering the blockbuster they want. Apple, still smarting from last week's 1.2% drop after a lackluster WWDC, stayed in the shadows, with delayed Siri AI updates dragging sentiment. Meanwhile, quantum computing stocks like Rigetti and D-Wave, which popped 18 and 2% last week, cooled off as traders locked in profits. Oklo, the nuclear power play, up 220% year-to-date, held steady on its Department of Defense contract, tying it to AI data center demand. Time's IPO, which soared 59% to $18.4 billion last week, stabilized, proving fintech still a crowd pleaser. And just when our story seemed to settle, a dark cloud loomed. Last week, Israel's strike on Iran and Iran's missile retaliation sent markets crashing and oil prices to $73.20 a barrel. This week, Monday's hope of de-escalation faded fast. By Tuesday, June 17th, oil prices crept back to $75 a barrel, as President Trump delayed a war decision until early July, keeping everyone on edge. The VIX, which spiked 15.5% last week, eased slightly, but stayed elevated, signaling fear. Friday's low-volume session, hit by quadruple witching, when index futures, options, and stock derivatives expire, saw the S&P 500 drop 0.22%, and the Nasdaq fall 0.51%. The Dow eked out a 0.08% gain, but the mood was tense. This wasn't just a plot twist. It's a cliffhanger that could reshape your portfolio. Let's pause our story for a critical chapter. The Israel-Iran conflict. Last week it triggered a market meltdown, and this week it's still the villain threatening your investments. Here's how this saga could play out and what it could mean for your portfolio. So, the best case scenario. Diplomacy wins. The US or UN brokers the ceasefire, and Israel-Iran tensions cool. Oil prices drop back to $70 to $75 a barrel, inflation stays near 2.4%, and the Fed keeps rates steady. Tech stocks like Oracle and AMD rally 3 to 5%, and ETFs like QQQ climbed 5% in a week. Your portfolio breathes easy, and you're back to planning your next tech play. This is the happy ending we're all rooting for. But what is the worst case scenario? The conflict explodes into a regional war. Iran cuts oil exports, pushing prices above $100 a barrel. Inflation spikes to 5%, forcing the Fed to hint at rate hikes by Q3 of 2025. Tech stocks like Nvidia, Apple, Microsoft crash 10 to 15%, with chipmakers like AMD hit by supply chain chaos. Consumer spending tanks, dragging Meta's ad revenue. Energy stocks like Exxon and defense plays like Lockheed Martin soar. But your tech-heavy portfolio could lose 20%, and you're glued to your brokerage app with your heart racing. So what is the most probable scenario? Tensions simmer without a full war. Limited strikes continue, oil hits $80 to $90 a barrel, and inflation creeps to 3 to 3.5%. The Fed holds rates on June 18th, but sounds hawkish, causing a 5 to 7% tech dip. Energy and defense stocks outperform, while QQQ holds above 19,400 support. Your portfolio takes a hit but recovers if trade talks stabilize. Diversification is your lifeline. So, back to our story. The Federal Reserve dropped a major plot twist on Wednesday, June 18th. Rates stayed at 4.25 to 4.5% as expected, but the Fed's dot plot projected just 2 rate cuts for 2025 and 1 for 2026, down from 2, signaling worry about oil-driven inflation. 7 FOMC members now expect no 2025 cuts, up from 4, a hawkish turn that spooked markets. Weak economic data didn't help. Retail sales, housing starts, and industrial production missed forecasts, and the Philly Fed's business tanked. Prices paid fell, but new orders and employment slumped, with the 6-month outlook crashing. Last week's CPI win, 2.4% year-over-year, was overshadowed by fears that oil could push inflation to 3.5% or higher. Every story needs heroes and victims, and this week delivered both. Oracle was our knight in shining armor, holding gains from last week's 13 to 14% surge, proving AI and cloud are unstoppable. Energy stocks like ExxonMobil, Shell, and Occidental Petroleum rode oil's volatility to 3 to 4% gains, echoing last week's 4 to 5% jumps. Defense stocks Lockheed Martin, Northrop Grumman, RTX climbed 2 to 3%, thriving as new safe havens. Just like last week's 3% gains, Chime's $18.4 billion IPO kept its shine from last week's 59% pop. The battlefield was littered with casualties. Nvidia and Adobe bled, with Nvidia down 2% on Friday, and Adobe still reeling from last week's 5.3% drop. Apple couldn't shake its post-WWDC funk, and airlines like Delta and United slumped as oil prices hit travel stocks. Boeing, down 4.7% last week after a crash, stayed weak. Financials like Visa and MasterCard, which fell 4% last week, faced even more pressure. This is a tale of winners surviving and losers struggling. For new investors, heroes like Oracle are tempting to invest in now, but diversify with an index to avoid traps like Adobe. As our story heads towards its next chapter, the stakes are high. The Middle East is a plot twist to watch. If tensions escalate, oil could hit $90 a barrel, and tech could drop 5 to 7%, as we warned last week. A ceasefire could spark a 5% rally. Earnings from Microsoft, Apple, and Amazon are make or break. Strong AI results could lift tech, but weak guidance could hurt. GDP and July CPI data will shape Fed expectations. With a 20% chance of a July rate cut, the Senate's Genius Act vote could push Bitcoin past $112,000. So don't get caught off guard. Every move counts. So are you riding Oracle's AI wave, hedging with Exxon, or playing it safe? Drop your strategy in the comments. It really helps the engagement of this video. If this saves your portfolio, smash that like button, hit subscribe, and tap the bell for weekly market sagas. Make sure to watch last week's video on screen right here to be fully caught up. Stay sharp, stack those gains, and I'll see you next week. Happy investing.